leave it to me to bring up legacy finance on a crypto show. But Ariel Investments and Charles Schwab recently put out a report that I found extremely compelling. Mainly what's on the screen here, but I want to get to that two ways. One, in the report, it was talking about Black investors versus white investors and the change of demographics with new investors coming into the space. A lot of African Americans are coming into crypto and investing for the first time. But here on the chart here, you see something that is really important. 38% of those under 40, 25% of those in the space overall. But I think if you look at the screen here at the four of us, it's diverse, right? Everything that traditional finance could not be, crypto is just because, right? And there was no trying there. So I tweeted when this originally came out because the folks at Ariel Investments and Schwab were concerned that the amount of young African Americans that were coming into crypto were looking at outsized returns. I think they were expecting 20% returns, that they knew that these were risky investments, but they were going in size anyway. And I said, I thought that was a good thing, right? When you pair it with financial education, especially we're in Financial Literacy Month, I think that is a good thing that investors are coming to investing for the first time because of crypto, especially for me as an advisor trying to get Black and brown folks in the markets for a very long time, and they wouldn't listen. It's for those people. It's for them. They came with crypto with no one dragging them. They came on their own and they're learning. So I think that is a really good thing. And again, indicative of the four faces that are on the screen. To me, this is the promise of crypto networks and the crypto ecosystem. But Will, I'll hop to you on that one and your thoughts here.
Yeah, I have two thoughts from this story. The first one is it's so frictionless to get involved with crypto. And that's what you really see in these numbers, right? I need to boot up a wallet on my iPhone. I need to go to an exchange and I just need to add some cash to it and boom, and I have some crypto in my wallet and I can do whatever I want with it. I can swap stable coins. I can put up something for interest. I can buy an NFT if I want. Like, you are instantly involved into a financial economy that is otherwise completely walled off to other people, completely walled off to the unbanked. Go get a bank account. You need an ID. You need to have an address. You have a bunch of things that other people are not able to do because their lives aren't set up in that way. And now with crypto, all those walls are gone. You literally just need an iPhone. You literally maybe don't even need an iPhone. You can just have your buddy do it for you. Like, it's that simple to get involved into this new financial economy. Second thing that was interesting to me out of this report was that they said, quote, Black investors are also more likely than white investors to believe investments in cryptocurrency are both safe and regulated by the government. To me, this is a really persistent, I don't know if it's like necessarily a lie or just like a misunderstanding, but that crypto is unregulated. Crypto is definitely regulated. It just depends on how you're talking about regulation. Obviously, like, some of the best headlines we're seeing over the last 2 years have been about regulation because a lot of people have concerns and questions about it. But those concerns and questions are, is crypto going to be different? Is it going to be differently regulated than others in the future? Like, is the government going to go after Bitcoin for some reason? Or is it going to go after crypto in general, broad strokes? Or is it going to continue to be regulated in the way it has been for the last decade? The IRS spoke on crypto back in 2014. SEC has been going after bad actors for years. They might be slow, but they're still going after bad actors. And a lot of the scams you see are mostly overseas. So to see like this persistent claim within this financial analysis that it's not regulated by the government and that people are misunderstanding that and acting like it is regulated by the government, it's wrong. It's like a wrong question to ask. I think there's other questions you can ask around that are important about like the level of regulation. Is it good or bad? But to say it's not regulated, it's like setting these people up to fail for the question. I want to throw it up to Zach and get your thoughts on this.
I saw Jen's hand, so I'm going to toss it back to her and then she can toss it to me.
Oh,
so
my
Jen,
bad, Jen.
You got it. It's okay.
I was just about to type thank you to the YouTube commenters who said, bless me for that sneeze in the middle of the segment. So thank you. Thank you.
Bless you.
Okay, so
I didn't even see it.
Thank you. Yeah, you guys just left me hanging. Anyways, when I read the story, I thought about this initiative that started in the South Bronx. It's called Crypto in Context. And it was really created to educate young Black and brown people in the South Bronx about what crypto could do for them. And it wasn't just about investing in crypto, but they learn about working in crypto and the technology and how how crypto can help contribute to this generational wealth and help contribute to Black and brown people amassing wealth that maybe they couldn't do before because of traditional financial systems. And I was speaking to one of the instructors of this initiative, and he said one of the first questions he asked these young people who are in their 20s is, where's the nearest bank in your community? And the actual nearest physical branch of a bank was more than 12 blocks away. And the financial services or institutions that were close to their neighborhoods were payday loan places. And so it was really easy for them to understand, like, wow, there's this opportunity for me here in crypto. Like Will was saying, it's really easy to set up a wallet and get started. And I feel like there's a place here for me. And so when I saw these numbers, that scenario that I heard of, the numbers really spoke to them. What I zeroed in on was this kind of call for more education, right? And I think that the platforms and publishers that are creating this education are doing a really great job, but maybe some of them aren't representative of the audience in the way that we should be. I mean, we're super representative on this show here today, and I think CoinDesk does a really great job at it. But I would love to urge more of the institutions and people and everyone who's creating content and educational content to really think about the audience and think about the people who you're putting in place to create that content, and make sure that that's representative, because that will help address some of these education numbers that we saw here in this report.
Well said. Mic drop. That was awesome.
That was good.
Drop
That
your
was
mic.
good. I think some of the, I think this report,
it.
you should actually, can we see? Mic drop?
Slam
Like,
on the
just
ground.
do this.
Yeah.
Really, really
Yeah,
loud.
there you go. That works.
There
That
it is.
works.
All
Control's gonna get mad.
Mic drag.
4 out of 10.
Mic drag. Mic drop.
Yeah, I mean, I thought this was really interesting. I thought the tone of this report was really interesting and somewhat patronizing, actually. I thought, like, the idea that, these, but risks emerge, right? That, like, people who historically have not had access to the upside of financial markets are saying, oh, okay, here's an avenue for me to do that in a new way. And here comes a report from Charles Schwab saying, hey, but watch out, they're doing this in a new way. That's dangerous. We should be risky. There are certainly risks in crypto investing, and it is certainly a far more volatile asset class than other things in the market. But the idea that people should be sort of like, like tisk for investing in cryptocurrency here is something that is a bit off-putting in this report itself. So it was interesting to see sort of the phraseology that was attached to some of these actually really interesting and I think positive usage numbers among certain segments of the population. So to see this sort of phrased in like, but risks emerge and here's some danger out there was a bit weird. So I don't know. I'm going to kick it to Tyrone for last thoughts on this one, and then we'll wrap this show after that. Tyrone, what do you got?
Yeah, last thoughts are simple on my end. I think there's a vast need for investor education for those coming into the market and for those that put reports out like this that really don't understand why folks are coming to it. No real-time payment system in this country, a lack of desire to own or interact with legacy systems that weren't set up for those that are considered an underclass in this country, and a young investor base that are very used to doing these things on their phone. It's not scary to them. We need to get over that hump, mass educate folks, and bring more people into financial markets. I think that's the only way this works.